Hello, welcome to Any Answers Answered for September 2021. Hopefully you've had a restful summer. Tim and I have been having a look through the pages of Any Answers, and as usual I've picked out a couple of questions to have a look at. The first of them this month comes from Joni Bonds and has a question on private school fees, Tim. The question is quite simply this: they have a client with 50 shares in a profitable trading company and his mother has the other 50 shares. And a friend of theirs has suggested that if they gave shares, 5 each let's say, to his daughter, who is 9, then you could pay this minor child a dividend. That dividend will be covered by the annual allowance, therefore no tax to pay. Quite reasonably, Joni is pointing out, they know this doesn't work as far as the parent is concerned. Is it okay if Granny does it? And I guess we are immediately, therefore, Tim, talking about settlement legislation.
Yes, and it's the parental settlement, and it's perhaps that phrase parental rather than grandparental settlement that's the issue here. It is that question about whether or not this is a parental settlement in tax, which would then mean that until the daughter reaches the age of 18 or earlier marries, any income derived from that parental settlement, so the dividend income paid to the daughter or used to pay her school fees, would be taxed on her father, the parent. There's no provision for the income to be taxed on the grandparent. And the assumption behind the question is that if the grandmother is the one who transfers the shares, so that the shareholdings then become dad has got 50, grandma has got 45, and the daughter has got 5. Could the dividend income be treated as derived from the grandparent and therefore fall out with the parental settlement rules? I don't think so. And none of the 14 comments on this thread to date raise the important point, which is that where the parent is, as in this case, a director shareholder and indeed will be the controlling director shareholder by having 50 and his minor daughter having 5, where the parent is that involved in the company, even if the shares derive from the grandparent, the revenue will still argue, and I would think argue successfully at tribunal, that this falls within the parental settlement regime, because the word settlement is very widely defined and it includes any arrangements. And here I would say that the father is involved in arrangements whereby the daughter became a shareholder, and the father's involved presumably in making the profits of the company, and the father's involved in making the decision to distribute dividends, some of which go to the daughter. So my advice would be the arrangement proposed would fall within the parental settlement legislation, and the dividends paid to the daughter or used to pay her school fees should be reported on her dad's tax return.
Just to confirm what you're saying then, if it had been grandma's company exclusively, dad was nothing to do with it whatsoever, and grandma elected to give some shares to her grandchildren, that's fine. It is the involvement of dad that causes the problem. And even if dad isn't the one giving the shares across, his involvement in the company, deciding how much dividend is paid and all that sort of thing, brings it into the parental settlement logic and therefore has to be considered. I think it's, as Tim has explained there, it's a far wider topic than an awful lot of people seem to think, where, it's just if the parent is involved. Our second question this month comes from Ray Lewin. The client wishes to be assured that their executives can claim the residential nil rate band on their death if they're leaving their property to their half-sister and half-brother who are twins, and the client had acted as a guardian and foster parent on the death of the twins' parents when the twins were 13 for some years until they reached 18. The client initially looked after them at their house, subsequently at her own home. The question, therefore, is can we argue, in fact, let me ask you 2 questions. On the basis that they are half-brother and half-sister, would leaving the property to them give us the residential nil rate band? Question 2, is it the foster parent part of this conversation that tips us over into the qualification?
Yeah, and the answer, fairly simply, answer question 1, no. Answer question 2, yes. The residential nil rate band, introduced as a matter of political vanity by George Osborne, who'd promised at the Blackpool Party conference back in goodness knows when, that if he became Chancellor, he'd increase the nil rate band to 1 million. Well, when he became Chancellor, he was told we couldn't afford that. So he said, well, work out a way where I can pretend we are affording it. And the answer was nil rate band 325, residential nil rate band in limited circumstances 175, add them together 500,000. But a lot of people get married, so one each is 500,000 times 2 equals 1 million. So he could then say, oh, I promised you 1 million, I've given you 1 million. Sheer political vanity, ridiculous complication. But the RNRB is only available if the residential property or property derived therefrom, so the property could be sold before death, but then we can trace the proceeds into other property, investments, bank accounts, etc. But it's only available if the beneficiary of that property is closely connected with the deceased. And to be closely connected, you must be a lineal descendant, so a child of the deceased, not a sibling or any other relative. Got to be a lineal descendant. However, the definition of lineal descendant does include stepchildren, adopted children, and foster children. So any child that the deceased has fostered at any time can indeed be the beneficiary of the deceased's estate, and as a result, that estate can qualify if that foster child inherits property, residential property or property derived therefrom, it can benefit from the residential nil rate band. So in this somewhat unusual scenario where the older half-sibling fostered the younger half-sibling twins, yes, the older half-sibling who was the foster parent can indeed bequeath the interest in the property or property derived therefrom to their half-siblings, secure in the knowledge that the executors will be able to benefit, other conditions being met, from the residential nil rate band.
Hugely important, I think, that as you've explained, it is a far more complicated area than people expect it to be, and also actually, as you've explained, far more complicated than it really needed to be. But an awful lot of people who assume that you will automatically get that particular relief, simply not the case. You do not get it automatically, that you have to tick certain boxes before you can claim. Hopefully useful to the two people who asked those questions. Also, of course, hopefully useful to many others as well. We'll be back, all being well, in a month's time. But until then, bye-bye.